Warren Buffett says you gotta buy when there's blood on the street. The problem is that when there's blood on the street, it's very slippery. At that time, I was scared.
Recently, I interviewed Laurent, who has bought 7 apartment buildings and an Akiya, totaling 97 units in Japan. So he has 96 long-term tenants paying him every month. Plus, he's in the process of converting the Akiya into an Airbnb, so he'll be collecting income from that house once it's open to the public this summer. So in this video, Laurent is going to talk about his journey to Japan and how he built a real estate empire in Japan as a gaijin who didn't come from money. If you want to get your real estate investing journey started in Japan, you're going to want to watch this. And later in this video, we'll discuss how to analyze an apartment building in Japan and share the details of how he bought an Akiya on the cheap and converted it into a beautiful beach house. Before we dive into the interview, if you haven't already, be sure to hit the like button and subscribe to this channel. It really helps the channel grow and I would really appreciate it. Also, if you're interested in how to buy a cheap Akiya in Japan as a foreigner, I put together a step-by-step guide that will help you own your dream house here in Japan. It's completely free. Be sure to click the link below in the description. Now enjoy my interview with Laurent. Alright, so today I'm in the heart of Tokyo on my way to Tokyo American Club. It's right next to Tokyo Tower and I'm about to meet this guy who owns a real estate empire in Japan and he's a foreign investor and I have so many questions. Alright, let's go meet him. Tokyo American Club is a premier private club located in Minato-ku, right next to Tokyo Tower. As I walked inside, I only saw high-end cars in the parking lot, so you can tell it's a very prestigious private club in Japan. It was a rainy day, but we were able to sit down outside overlooking Tokyo Tower. Alright, so today I'm here at Tokyo American Club in the heart of Tokyo, and behind us there's Tokyo Tower, and my guest today is Mr. Laurent. Laurent, okay, sorry, I want to make sure that I'm pronouncing it right. Anyway, he is a foreigner in Japan who has 96, 97, somewhere around there. Yeah, something like that. An empire, real estate empire in Japan. And I have so many questions to ask him. The first question is, why don't you have 100? Come on.
Yeah, man.
Yeah, maybe tomorrow. Yeah. By tomorrow, you can add like 3 units, right?
You know what?
Yeah.
It's the idea like, you will never make it. I just come to terms with you will never make it. I'll be happy when I have this, when I have 10. I'll be happy when I have 20. I'll be happy when I have 100. And you know what? There's always a higher threshold. So maybe a couple of weeks.
Couple of weeks. Okay. I'll give you 2 weeks. Then.
Thank you.
All right.
Thank you.
Well, thanks for joining us today.
Thank you.
And would you mind introducing yourself to the audience? Where you're from, what your journey to Japan was, and why are you here? And
thank you very much.
Yeah.
My name is Laurent. I was born in New Zealand. I grew up in New Caledonia. New Caledonia is in Japanese like Tengo Kunichiban Chikai Shima, which means the closest island to paradise.
Yeah.
This is a resort destination, so I grew up over there. I'm French and I'm Kiwi. I came to Japan first time, I think I was 20 years old. I like the country. I like martial arts. And of course I had a Japanese girlfriend, so that gives a lot of perspective. Then I came back, worked for the French embassy, worked as an accountant in a Japanese company preparing financial statements in Japanese under JGAAP, and I had my whole career here. I like Japan.
Yeah.
Japan is a great country.
Yeah.
I mean, yeah, everybody should come and welcome to Japan. It's a great country.
Yeah. で、日本語も話せて大阪弁ですよね。関西弁。
いや、バリバリやで。
バリバリ。
いや、極めればまだふもとなんですよ、実は。
Well, thanks for joining us today. And tell us how you got your real estate investing journey started. So.
All right, so it was a near-death experience.
Yeah?
Yeah.
Near death, okay.
Near-death experience. So the day after my wedding, we got married on November 11, 2011.
Yeah.
The wife picked the date. She said, there's a bunch of wine, you can't miss the wedding anniversary. Yeah, okay, that's about right. So the day after that, I had a kite surfing accident and I perforated the pleura, broke 3 ribs, and I nearly died. And I thought, if I'm going to start a family, I need to provide for my family. And I need to make money working for me. At that time, I was working on the stock market. I know, like when you work in hedge funds and all these, like you're not here for a couple of weeks, get out. They'll ship your stuff and goodbye. So fortunately, I was working for a very good company, Fidelity, and one of my colleagues was doing real estate, Ebihara-san. Shout out to Ebihara-san, my mentor. And he was doing real estate in Sapporo. And I thought, wow, real estate in Japan, this sounds crazy. And it was right around the time when the Fukushima disaster happened. So we identified a property in Tokyo and we bought it. And at that time, it really sounded like a crazy idea. Nobody wanted to do real estate, like no one. Even the bankers like, what's wrong with you? I'm like, great question. How much time you got? Forget about it. So we bought the first one, and it did well. It has done spectacularly well. We bought it along.
And where was this, in Sapporo?
It was in Sakuradai, which is in Tokyo.
In Tokyo, first one.
It's along the Fukutoshin line, and at that time they were just building the railway the station. So it's like walking distance, 2-3 minutes from where we are.
Yeah.
The station was not even complete, and it was right after Fukushima, so it was the bottom of the bottom. And the yield on this has been spectacular. I mean, now I think we average for Tokyo property close to 9%.
Wow. So take us back. Like back then, I was here too in 2011, 2012. You know, scary times, right? Economically, in like so many ways. Like looking back, of course, it was a good time to invest. But like, how did you know? Especially if it was your first deal.
I didn't know. I mean, I was scared shitless.
Yeah.
But you know, I work in the stock market, and hardest trades are usually the most profitable. If they're easy trades, guess what? Somebody has taken it before you. So
that's a good one.
Warren Buffett says you got to buy when there's blood on the street. The problem is that when there's blood on the street, it's very slippery. So yeah, at that time I was scared shitless because I mean, even though now the amount is like it was Itengoku plus
like
the
1 million, 1.3 million
US
dollars. Yeah.
And all included with the taxes, we're talking about probably 1.5, between 1.5 and 1.6.
Sure.
I mean, at that time, it seemed like a big amount.
Yeah.
And I was scared, and I learned to relax.
Yeah.
Get comfortable with bigger numbers each time.
Yeah.
But the first building is always the hardest.
Yeah.
The first one is always the hardest.
Yeah.
If you have a bad experience, then it's going to color the way you approach things thereafter.
Yeah. And what did you do before getting to that first deal? Like, how did you educate yourself? You say you had a mentor.
Yeah.
But like, how did you prepare for it?
It's not that difficult. I mean, there are plenty. You can get like Nomura Fudosan, like there are tons of them. You get on their mailing list. You just sign up, you get on their mailing list, and you sift through them. And at that time, the conditions were very different because the yield, nobody wanted to do real estate.
Yeah.
When people when I said, "Oh, I want to do real estate," like, dude, get a life. Yeah, it's a brilliant idea. This is what I'm going to do real estate. So nobody wanted to do it. So you had spectacular deals. But again, I mean, and for real estate, you really need to take your time.
Yeah.
You need to kiss a lot of frogs. Yeah, you need to kiss, especially if it's your first one, because you're scared. So take your time. Don't jump at the first opportunity.
Yeah. Okay. So that was in Tokyo, right? Yeah. And then tell me how you went from one to two to you.
Okay. So the idea there is then we finance through the bank. We use the same bank consistently, and I remember I called them over and over, like, please give us some deals, please give us some deals, please give us some deals. And Japanese banks are by definition very conservative. So what happened is literally 1 year and 1 day after we concluded the deal, all of a sudden we're on the mailing list. And because they saw our financial statements, it's not every day that your banker looks at your financial statements like, dude, you should have more expenses. You really are conservative. Like when the banker says that, like, all right, I'm going to be in your good graces. I know that. So then they started giving us some deals. They put up on a better mailing list. And in 2014, we bought 2 buildings, second-hand buildings. And at that time, people were starting to get interested in real estate. And we bought in Sapporo. And we've bought in Sapporo ever since. Sapporo has been a spectacular market.
I just did a video on Sapporo. But tell me why you chose like living in Tokyo. And when most people think investing in Japan, like Tokyo, Osaka, right? Maybe Fukuoka. But why did you choose Sapporo? Yeah, Nagoya. Why did you choose Sapporo?
Well, if you invest in major cities like this, you're going to have a lot of competition. So to me, investing in Tokyo is suicidal. We got a great deal because the time and the circumstances made it so.
Yeah.
But it's very simple. If today I wanted to sell my building, I could double the money.
Like double the money that you purchased for.
It's much above, like the retail investments, including all the cash flows and everything, is much higher than 100%.
Wow.
Because at that time, nobody wanted to do it.
Yeah.
I mean, when we found that deal, like that thing had been on the market for 3 months.
Yeah.
It was a plot of land, like the size of a tennis court, a little bit bigger. Nobody wanted it. Now that thing couldn't even touch the ground. So if you come to big markets, these are very competitive.
Right.
Because everybody wants intuitively, instinctively, we want to have real estate close to where we live, which actually doesn't make much sense. If you want to make money, you got to take some risk, and the risk is further away. Now, why Sapporo? Sapporo is a bit different than other markets. It's a bit different than Honshu, I would say.
Yeah.
Because it's more provincial. It's a different island. The central government, Okurasho, finance ministry and all this, they want to sort of subsidize over there. So you have all the main banks, but the size of the market in Sapporo is small. So you don't have all the big developers, so the game is dominated by local players, and two companies are really good, like Factor 9 Co-Planning. They're really good. They dominate they don't dominate, but they know the market. So if you know those players, you can get financing from big banks, then you're good to go. You get a good yield. So it's much more attractive. And the game has been known now, and there's more competition. I mean, there's more supply of buildings. So it's getting less attractive. And now the yields have come down to, I would say there's probably a 1.5% difference between Tokyo and Sapporo. So that makes Sapporo less attractive. But it's still, there's a positive delta over there. So if you want to make money, if you come to the big city, this is where everybody wants to compete, and you won't get much of an edge.
Right.
You're just another lambda dude in the big queue.
That's interesting. And so when you say building, how many units are there usually? So first one, did you say like 15 units?
Yeah.
15 units for the first one.
Yeah. 15.
And then you bought 2 more buildings 2 years after, right?
Yeah.
So you have 15 units, and then now how many units are
altogether? We have 96 units. Occupancy is 94%.
94%.
Yeah.
Wow, that's pretty impressive.
Average throughout the year.
That's amazing.
Yeah. I mean, we have a very simple strategy. A lot of people try to maximize the rent. We want to minimize the
turnover. Yeah.
I mean, the idea there is we'd rather sacrifice. And if you look at it, the real estate is very segmented. Like there's the bottom of the barrel, the 30,000 yen, 40,000 yen, and so on and so forth. And this is where you have a lot of problems, like people leaving without paying their rent, and rent collection, damaging property. When you move a little above that, when you offer a good service, but I would say at average market price, or a little bit like 1,000, 2,000 yen cheaper, you're going to get people. You're going to get tenants. And we treat our tenants very well. Yeah, so no problem on that front. Like it's very high occupancy.
Wow. And you're doing this all on your own, right? With your family. Do you have partners?
And I mean, like the managing the company, yes, myself primarily, and
like the ownership. Yeah.
Ownership is the wife and me.
Wow.
And but the managing the properties themselves, we have a Kanigaisha. Kanigaisha is management companies.
Property management. Yeah.
Property management companies, and we on very good terms with them.
That's amazing. Because you're in Tokyo. How often do you go to Sapporo?
We're gonna go there. We go there once a year, give or take.
Yeah.
But it's like Nagaitsukiai, like in Japan, when you build relationships over time. And I've introduced customers to them. I've introduced friends. So I mean, they see me coming from a mile away. So, and besides, like, there's not so many gaijin who do it. So
that's awesome. And I think the first question that came to my mind, like, especially if you're doing this, with your wife, how are you financing these deals? Because that's it sounds like a lot of money.
Shout out to Risona over there, mommy. I mean, at the end of the day, is when you get into the good graces of your bankers, you're in their good graces, so they want to do business with you. So we've been excellent stewards. We've managed the company very well. We've repaid our debt. We're fully transparent with the bank. It's a win-win situation. What banks want to avoid is the suruga type, like where they flow shady deals. Guys can't repay. Guys are, you know what? I shouldn't say that on your YouTube channel, but what happens is, like, for instance, people create companies, they borrow to buy buildings and properties, then they create another company and borrow with another bank, and then they become over-leveraged. And it doesn't take much from over-leverage to kick the other way around, and then it's game over. This is what happened with a lot of people with Suruga. Whereas in our case, we bank with the same bank, we're fully transparent, we manage our company very well, so it's a win-win situation. It's in their interest to give us good deals, and it's in our interest to bank with them. So it's mutually agreed.
Yeah.
And we have very good relationships, so it's a win-win across the board.
Okay. So if someone, a foreigner, maybe living in Japan, wants to do what you're doing, wants to start what you're doing, start building a relationship with banks, what should they do? What should they start doing?
I mean, I would be zealous about communicating and being transparent with the bank. This is what they call the rent roll, like month after month after month. Even the bank, like you don't need to send it to us. Like I send them every month. I have a spreadsheet every month religiously. This is what we get from the property management. This is the rent roll. This is our cash flow. I'm like, whoa, yeah. And then as soon as we complete the financial statements, we send it to them. So there's like never any problem. The idea is to build a relationship with the bank because it doesn't come out overnight.
Yeah.
It takes a long time. And banks are by definition conservative, especially Japanese banks. So if you build a relationship, if you're proactive about it, then at some point they will reciprocate.
Yeah, and Japan's notorious for super low interest rates,
Oh,
right?
yeah.
Like Japanese banks. Can you give us a range of like the interest rates that you're getting on these loans?
Yeah, it's interesting because I was talking to a fixed income trader friend of mine last week. I bought some gear for kite surfing. He said, with interest like this, it's criminal. I'm like, yeah, my man. So yeah, we pay 65 basis points, so 0.65%.
Oh my goodness.
On 10-year fixed term.
Wow. Because in the U.S. it's like 7%, 8%. That's the norm now. It used to be like 3, 4, a couple of years ago. But still, like in Japan, that would be considered super high, right?
But again, it's also a function of the relationship that you build with the bank. It doesn't come overnight. The first interest that we got was much higher than that. And every time they say, hey, we were good customers and we took advantage of a lowering rate. And it's a negotiation. And everybody's happy with that.
And is it possible to get a loan without residency in Japan?
No.
No. So it is impossible. You have to either be a citizen or have a residency.
Permanent residence.
Yeah, permanent.
And it makes sense because real estate is like for 30 years. If you're on a 1-year visa and you want to have a 30-year loan, you're like, my man.
Yeah.
So I've tried to introduce like crypto millionaires who want to have a more stable cash flow. And I try to introduce them to the bank and they're like, yeah, well, stop embarrassing yourself and stop embarrassing us.
Yeah.
Like, okay. Got it. You need to have the permanent resident. That's a prerequisite. And it's not very difficult to get. Japan has lowered the criteria for permanent residence. So before it used to be like 10-year continuous.
Yeah.
Now it's much easier.
Huh. What are the criteria except for marrying a Japanese national?
Still there's like duration of residence, but there's also like it's linked to taxes. So if you've been a tax-paying citizen, and then you tell them that you want to do real estate, that you've been here for more than 5 years. I think it's somewhere between 5 and 7. Yeah, all right, whatever. If you're like a Toshika like investor, they'll give it to you. But you have to pay taxes. It's very linked to taxes.
Yeah. And also, like when you buy, large buildings like that, what kind of a down payment are you talking about?
Oh.
You have to come up with a ton of money to begin with, no?
So the first one was 95% loan to value. So 95% out of 1.5, but that's the rate because the cap rate, the rimawari, was above 8%, was 8.5%, something like this. So 8.5%, the bank calculates that okay, no matter what, unless you're really stupid, they're gonna see their money back, even if they foreclose, somebody's gonna take it over. So the risk is very minimal. But now, for instance, the cap rate is about 6%. So the down payment is that much bigger because it's a bigger risk for the balance sheet of the bank. So one mistake that people do is they see them like for a bank, money, the cash that they have is a liability. So they want to lend it, but at the same time, they want to mitigate the risk. So see if you can see yourself as how does the bank think, then you have a much better time. So it was 95 when we started. A couple of years down the road, the Okura Show, the finance ministry, loosened the regulation, and then it was full loan. And then it was free money for everybody. I remember like at one point we had full loan. So what does full loan mean? Like, do you lend 100%? Like, no, we don't do 100%. Okay, just asking. No, we do 108%.
How does that work?
What do you mean you do 108%? Well, you got to pay the shohize, which is like sales tax on it. So for a few years, I think it was 2012 to 2017 or 18, somewhere like this, it was like they don't lend you 100%, they lend you 108%.
So you put down basically almost nothing.
The registration tax, so all the fees that.
And you got a cash flowing property.
Correct.
For free, basically.
Correct.
Sponsored by the bank. Wow.
My man.
That is awesome. And that's how you got to
But at the same
96
time,
units, yeah.
I mean, you would think that you can go ad infinitum, right? But remember that the banks, they're conservative. So there's a size of your like you have your own personal balance sheet, plus you have the balance sheet of the properties, and they look at it all together. And if you do it, and you have this thing called rentai hosonin, which means like guarantor, you guarantee on your personal assets. So there's a cap to it. You can't go ad infinitum. If you do it as I did, which is like asset management. Now, if you do it as a jigyo kaisha, like if you do it professionally as a real estate corporation, that's a completely different story. But then you're talking about different sizes of balance sheet. You're talking about different structures of loan. You're talking about like non-recourse loan and so on and so forth. So that's a completely different story. Mm-hmm. But the way I did it as more of an individual, doing it under the umbrella of a small company, there's a certain cap to your balance sheet.
Yeah, awesome. All right, so this is one of the deals that you're looking at in Sapporo. Can you walk me through what do you see and what are the numbers that you look for?
Okay, so number one here is like Ichioku 6,000,000. So that's the price of this property. So that's the first part.
Yeah, and how much is that in 160 million yen?
160
which
million
is about
yen.
like 1.2, 1.3 million US.
Yeah, 1.3 million US. Yeah. So then the second thing is you look at the yield here, the cap rate, the rimawari, and it's 8.57, which is very high. So this is a second-hand building, right? Okay, so we're looking at this number. Third thing is we're looking at the chikunensu. So when it was built in 2006 November. Now we know that this thing is in Sapporo, built in 2006 and 1.6. So it means it's 17 years old. Now the market in Sapporo now is about 6.5. So why is that differential? You have to know that actually this thing is about 17 years old. Right around between 15 to 20 years old building, you need to do what is called daikiboshuzen, which is like large scale work. So this means that actually you have to bring like scaffolding and do the roof and so on and so forth. So it's going to cost about somewhere between 10 to 15 million yen. So because this building is old and it has such a high yield, the current owner has probably delayed doing those works. So we're going to check it out. Now, another thing is how many floors that it have. It has 8 floors, so this means that it has an elevator. The cost of an elevator is between 10 to 15,000 per month. So that will come out of your cash flow, out of your operating income. Second thing also that is important to look at, fourth thing that is important to look at, you look at the madori, which is like how the building is done, and you're looking at, okay, is there a parking lot? And you can see there's a parking lot. So you have to ask about road heating. What is road heating? Road heating is in winter, it snows in Sapporo. And if there's no road heating, the snow doesn't melt, so somebody has to rock up here with a shovel and shovel snow. That is a big cost. If there's road heating, you're looking at a cost between 30,000 yen to 50,000 yen per month for about 3-4 months of the year. So once you've done that, okay, then you can go walk into it. All right, let's go. Page 2, you can look at, okay, when did the tenants come in? And you can see that this is actually quite exceptional because the tenants have been here for a long period of time, which suggests that there's not been big work renovation, like the old, the way that we talk about the Ikeboshuzen has not been done yet. And fair enough, yeah, it's not been done yet. Plus there's the cost of the elevator. Overall, I would say it's a good property, but the yield that you see here is fairly deceiving, in a way that actually you're gonna have to cough up a lot of money. So for this kind of property, you probably would have to drop about a down payment of 10 to 15%. I mean, in our case, this is because we've been long-term customers, so that's somewhere between 16 million to 20 million. And on top of that, you have the registration fees and so on and so forth. So you're looking at another 2-3 million yen. So overall, the down payment would be, I would say, somewhere like 15% of it, 15 to 20% of it. Plus, you're looking at to drop another 15 million yen. So
for the capex, like to fix
this thing.
Okay.
So
the initial investment
is a bit higher than what you think.
Yeah, pretty high. Okay.
Yeah.
So would you go for it or no?
I mean, it's in Kotoni, so the location is good.
Yeah.
Oh yeah, I forgot to mention that. If you're in Sapporo, you got to look at how far it is from the station. And if you see that it's like more than 10 minutes, forget about it, because walking in the snow in Sapporo midwinter in the snow 10 minutes away, no thanks.
Yeah. And which ward, Naniku, is better in Sapporo? Because I was just there and I know like Chuoku, like center is probably the best. Minami, Nishi, Higashi, right?
So, for instance, we have property in Atsubetsu that one has appreciated. Kotoni also that one has appreciated.
Yeah.
So we've enjoyed the rent raise, and it's interesting because the company guys are like the management companies like, dude, we've never seen a rent raise in like 30 years. They're like, yeah, man, enjoy the rise. Enjoy. Inflation, welcome to Japan. Inflation is the best thing since sliced bread. So I would say like Kotoni is a good, so this is Nishiku. Kotoni, so it's a good spot. We are in Nijoniku. Atsubetsu is also a good spot, like where there's the Shin Sapporo. I mean, this is where it's rising because Chuoku has always been good. Mm-hmm. So if it's super central, yeah, that thing doesn't go out of fashion.
Yeah.
So you're looking at, even within Sapporo, which is already provincial, you're looking at more the periphery where there's more appreciation.
Yeah.
So where there's more potential for appreciation. So yeah, overall it's not bad at all. Would I go for it? Well, we inquired, and surprise, surprise, I mean, people were all over it like a bad smell. Like they were all over it like a fat kid on the Mars bar. So much for body positivity.
So I feel like, I have a better understanding of single-family homes, criteria.
We didn't talk about that. Yeah,
small multifamily, right? You're in like a medium to larger, multifamily. What are, if you were to like bottom line, like 3 most important criteria in picking a deal, what would they be? Maybe 5.
All right. Okay. So, I mean, it depends first if you're looking at Shinchiku, which is brand new.
Yeah.
Or, for instance, here, this is good. Because we're talking about 1 LDK. 1 LDK means one living, dining, kitchen. So these are primarily targeting, usually at that size and at that price point, which is about 58,000 to 60,000. We're looking probably at either young single men. If it's a little cheaper, we'll be looking at young single ladies or older gentlemen. Now, 2 LDK is like family without kids usually. Yeah, 55 square meters is usually like double income, no kids, or maybe very young kid. Because when the families when the kids get a bit older, we're looking at San LDK. So, what is important to understand is that when you're looking at 1 LDK, you have a higher yield. Well, which makes sense because it's smaller surface, more people, which means more income. But the downside of it is a higher turnover, which is why in our case we have a lot of 1 LDK. And the way we circumvent this is we price our rent maybe 1,000 yen cheaper than the market, so that it's attractive. Now 2 LDK you have lower turnover, but you have lower yield at the same time. So everything in life is a trade-off.
Yeah.
So the things that I would be looking at, it depends on you. To answer your question, it's a long-winded answer. To answer your question, it depends on if you're looking at brand new buildings or if you're looking at second-hand buildings. Now, since we have this second-hand, what I would be looking at is the gross yield here, the cap rate. How big is it? To look at, then was the Daiki Boshuzen done, yes or no? It's a very binary. If it's not done, it's a big minus. Because futa akete mitara, when you pop up the hood and I didn't realize that the plumbing was so bad.
Right.
Then it keeps on piling up and you don't know. So if the Daiki Boshuzen is done, then it's also we're looking at buildings that are 17 years old, which means that the next person who's going to buy it is not going to flip it. So then this one you buy to own until termination. So that's also a big factor. So how long? So the yield when it was built, that's about it. These are the 2 big ones that I would be looking at.
So, if you have that many tenants, you must be collecting a lot of rental checks. Rent. If you don't mind sharing, what kind of range are we talking about per month?
Okay.
Yeah.
You're talking about individual per room. Like, well, here, for instance, this was a good example. This was in the 50-60.
Yeah.
Our average is slightly below this.
Okay.
Per tenant.
Yeah.
We have family units. We have like 1 LDK again. The one in Tokyo is by definition more expensive.
Sure.
So the rent is higher in Tokyo. Yeah, I would say it's roughly the same range. somewhere between 50 to on the lowest end would be just shy of 50,000, and on the highest end would be just shy of 140,000.
Oh wow! So can we say like times 96, like about like five
Yeah.
million, 6 million? in
Something like
rental
that, yeah,
income?
yeah.
That's awesome.
And the cash flow, after reimbursing the loans, would be about half of it, give or take.
Wow, that's
I
amazing.
mean, give or take, like maybe 40% of that, or it depends month on month.
Yeah, passive income. I mean, you're doing a
Passive
lot of work,
income.
but at this point, it's collecting
Yeah.
rent pretty much automatically. Yeah, you have a team set up. That's awesome. Congratulations.
Thank you.
Yeah.
Thank you.
So you recently purchased an Akiya.
Yes, sir.
Down in Izu,
Yes, sir.
Shizuoka, Shimoda, right?
Yeah,
Which is
Shimoda.
a beautiful area of Izu. Beaches, so many beaches. Tell me about that.
So
How did you find it? How did you negotiate it, and what does it look like?
So, I mean, the negotiations unfortunately were not, the landlady says, listen, I have many people who want to buy my Akiya, so it's going to be that price, and this is the price. I'm like, okay.
What was the price?
450万, so that's it.
Jeez, 4.5 million.
4.5.
Which is like
$30,000, give or take.
30,000.
$28,000.
Oh
And,
my gosh.
well,
Wow.
that thing was built in 92, the year when I first came to Japan. And it was built at the peak of the bubble, and back then it was worth about 40 million yen. Then when the lady purchased it, she bought it for, I saw the price, and I'm not going to talk about it out of respect for the landlady, for how much she purchased it. So I totally understand where she was coming from.
Mm-hmm.
It's in Kisami, so Shimoda. Why Shimoda now? Because
Tourists. I mean,
Exactly.
people love going there. Even like the Japanese. Like it's close enough from Tokyo.
the
Beautiful beaches.
the most luxurious train in Japan, apart from the one that runs around in Kyushu, the most luxurious train starts from
Romanska.
Tokyo. Huh?
Is it Romance car?
Yeah,
Right?
And you have like the Safi, which is first class train. You get in Tokyo Station or Shinagawa, you crack your beer, open your bottle of champagne, you're all the way down to Shimoda. There you go. And then you have Iritahama. So, okay, there are three beaches in 4. There's Shirayama, which is like a bit more young population, which is north of it. Then there's Goishika Hama, like where the Spain Mura, like the Spanish village. And there's Ohama, like the traditional people. When people think about Shimoda, they think about this place. And then there's Iritahama. And where I bought this thing was up the hill from Iritahama, and there's a bit of gentrification. So there's a friend of mine started a fantastic bistro over there. Now there's a new pizzeria, there's a new taqueria like tacos. Then Café de Kitsune, this high-end cafe is gonna show up over there. And if you know Café de Kitsune, like in first class, Jal and Anna, they give you this pouch and you see like Kitsune, Maison de Kitsune. So it's a joint venture. I mean, it's two guys, like a French gentleman and a Japanese gentleman. So it's going to be a high-end cafe. High-end cafe that is loaded with beautiful chicks means that Oji-san, like, bunch of dudes are going to rock up. Bunch of dudes rock up, the price of real estate goes up. It's mathematical, right? Beautiful chicks means like a lot of dudes are going to rock up. And fair enough. So ever since I bought my Akiya last year, so I went shopping around for all the daiku, and I contracted with Takahashi-san. Takahashi-san is a Jingu Daiku.
Yeah, and Daiku is a contractor.
Yeah, he's like he's a carpenter, but he can do like carpentry for Buddhist temples,
Yeah. Wow.
which is like without the nails and so on and so forth. Like, I mean, the precision and the quality of the work is amazing. So he did the terrace, and that thing was run down. It was collapsing, so it was dangerous. But the location is absolutely breathtaking. I mean, it's on top of a hill. You can see the valley you can see the 7 islands in the back. There's a bamboo forest. I mean, you rock up with your girlfriend, and then your kids are going to be made in Shimoda. Guaranteed. So, I mean, yeah, well, as soon as you go on the terrace, like this is wow effect. Like you go up and yeah, maybe, and like whoa. So,
Yeah.
Iritahama is beautiful. Akiya is there's a good, there's a bad, and my recommendation for Akiyas is, if you want to buy Akiya, go with a carpenter.
Mm.
Because I went with Takahashi-san, like there's many foreigners buying Akiya and I really got mine at the bottom of the bottom. The guy who did the Akiya bank, he came back to me, hey dude, if you want to sell your Akiya, you can not double the price, but you can make 50% on top.
Jeez.
Because I really got like, nobody wanted Shimoda.
Really? And when was this? Last year?
Last year was pretty much the bottom, but ever since then there's been the gentrification of Itahama. Now I was down there last week to install the unit bath and so on and so forth, to sign up with the gas company. And I walk down the beach, I go and say hello to Johnny and a bunch of guys, and see a bunch of foreigners running around. You know that two things in Japan. When you see foreigners running around and when you see beautiful girls running around, you know that the dudes are gonna come in. These are the leading indicators. No doubt about that. I thought, oh, this is not such a bad investment after all. And so we're gonna give it to Minpaku. Minpaku is Airbnb.
Yeah. And did you get a license for Minpaku?
It's in work in progress.
Okay, nice.
Also, there's a specificity in Shimoda. Before there used to be Minshuku. Minshuku were like hostels or pensions, Japanese pensions. But all these people, they're like 70, 80 years old. They retire and they never took really good care of the Minshuku. They just like, they lived on their Minshuku, but they're retiring. So there's actually, in terms of supply and demand, there's a lot of demand to go to Shimoda, but there's not much supply. And when you're tapping into like this kind of market that we're looking for, like you want to spend a nice weekend in a nice place with comfortable, beautiful. There's a finite supply.
Yeah. And how did you get it? Through Akiya Bank, you said?
Through Akiya Bank.
Okay.
And it's a very straight-through process.
Yeah. No, we help clients do that as well. It's really hard if you don't speak the language, because you're dealing with municipalities, right?
Yeah.
So that's awesome. And so, if you don't mind sharing, so you bought it at 4.5.
Yep.
And how much did you put into it? Rehab.
Okay, so first to get the terrace up and done, it cost, but I mean, the terrace was like 40 square meters. Now it's about 60 square meters.
Wow, nice.
So
that's very spacious. Yeah.
Oh, yes, it's huge. So you can have a party of 10 people. Not only that, we reinforced the whole building structure. So for that first tranche, we paid 3.3 million. And then we decided to do the interior, and we really want to give it a Santorini feeling. We really want to give like luxurious and comfortable. Something you walk in, well, like this feeling of, you walk into a place like, I feel like I like being here. And for that, we dropped another, 5 million yen.
Okay.
Because waterworks is really important. It's something that people need to understand. The waterworks, anything that has to deal with water, it costs a lot of money. And when you have to redo the piping and so on and so forth, it will immediately cost a lot of money. So electricity is no big deal per se. I mean, electricity, you can always pull a cable. But all the pipes is really important to understand. And also one thing that if you buy an Akiya, one thing that you should really be mindful about is shiroari, termites.
Yeah.
So this is why always the case, I went to visit with Takahashi-san, the carpenter. I went to visit another Akiya bought by a gentleman, really nice guy, a Belgian gentleman. And the basis, the foundations, it's been eaten out by the shiroari. So you can't build anything on top.
Right.
You have to tear it down or you have to leave it as such. And to reinforce, to fix it up costs a lot of money. And you would have to sacrifice the vegetation around. So this is not something I was ready to do. And this is something that, if you have like a coup de cœur in French means like, I really love this place. Yes, it's nice to come with a carpenter. With that said, Takahashi-san, when I bought that thing, it tells you one thing about the market price. When I bought that thing for 4.5, at that time, a lot of the Akiyas were in the 2 million range, 2.5, 2.8. So mine was really expensive, and Takahashi-san like, negire, like, you gotta negotiate hardcore. Like, dude, I tried. I tried. He said, it's too expensive. And now, like, say Takahashi-san comes back and like, hey, kore yasukatta ne. Like, it was cheap, man. You got a good deal. So that tells you that the price has gone up.
Yeah.
And fair enough, like, there are more and more people buying the plots. So I guess I was lucky.
Yeah.
And persistent.
Yeah. If people want to stay at your Airbnb, where can they visit?
It's going to be on the market from next month.
Next month. Okay.
And not only that, the lady who designed the interior, she works with Louis Vuitton, and she's like a merchandiser, interior designer. She said, I'm going to do it. Like, oh dear. And then she has like this fantastic touch. So all the attention to detail and all this.
If you have the link, share it with me, and
Okay, yeah.
I put it on the description, the link in the description, so you can stay at his Airbnb.
And this year, I want to do something for the people who come this year, who come through you. There will be a bottle of wine, because a friend of mine is a winemaker, Olivier, my man, is also got to sell his wine to the taqueria downstairs. So they will have a bottle of wine if they come through you.
Ooh, all right. We just got a deal. Okay, make sure you subscribe.
It's called French Touch.
Yeah.
So I'm going to stack up the wine. If
Touch.
they come through you, they got a bottle of wine.
Awesome.
For
All
all
right,
the
hope
time.
you like wine and good French wine.
Absolutely.
And Akiya Airbnb going 90 whatever units of rental units. Oh man, that's so cool. So what's next for you? What's after this? 100 units and beyond. You've made it.
Yeah, but you never make it.
You never make it.
Like when you are the first 10 units, like, oh, how can I get to 20?
Yeah.
And then when you're at 20, but my next target is 50. And then you're at 50. Yeah, 100. 100. Then when you're at 100, 200. So you'll never make it.
Right.
So what's next? I have a few ideas about real estate in Japan, and some involving Akiya, some involving Danchi. In Japan, there's also an influx. Japan, by definition, they have to import workers from overseas. Now, a lot of these workers, they want to find a place to buy because, hey, they're buying an apartment in Manila. They might as well want to buy an apartment in Japan. But how can they do that? And I try to do that with a partner of mine, and it's not as trivial as it seems. It's not as easy as it seems otherwise, but I think that there are some ways for that. And I'm really keen to do Akiyas because a lot of Japan is going away. A friend of mine, an ex-colleague of mine, does ramma. You know ramma, like the carved like wood that you see.
Yeah.
And he will open a museum of ramma. So there's a lot of Japanese treasures, Japanese house, Japanese Akiya that are available, and there are plenty of ways to turn them around and make everybody happy. So that's on that front with the real estate in Japan. I believe that still there's an imbalance, as you said. There are 10 million Akiya or 10 million. If you look at the Japanese market on the surface, it looks like an awful market, right?
Yeah.
Like 15% vacancy. It's because the owners don't take care of their property. I throw a tantrum when our management companies they don't want to do the teire, like which is the maintenance. We're like meticulous on the maintenance, and we never skimp on the maintenance.
Yeah.
We never ever skimp on the maintenance, and this way you can manage properties for a long time.
Yeah.
Does it make sense?
It does. Yeah. I mean, on the surface, because when I first started this channel, because I heavily invest in the U.S. market, right? I'm like, oh, don't invest in Japan. Like it doesn't make sense. And I started to meet people. The other day I interviewed a guy who bought 10 Akiya empty houses, and he fixed them up, and now he's owns them free and clear. Now you own 90, 96, 97 units all over Japan, mostly in Hokkaido, but you're making it work. The numbers make sense, and your logic totally makes sense. So yeah, my next project might be it's going to be Japan, maybe.
Makes a total sense.
Yeah.
And like for instance, I was looking at a few years ago at Hakuba. I really missed that one because at that time a friend of mine was a skier.
Yeah.
And he really timed the bottom. We were looking at a place, like they had a fireplace outside, like that thing that goes out for 10 million yen. I'm like, man, fuck it. And then it's probably the biggest mistake of my life because I saw it on the market the other day for $2 million.
Wait, $2 million? 10
10
million?
yen. That thing went bankrupt. I could have bought it.
Oh my goodness.
Yeah, that thing was bankrupt.
Hakuba in Nagano.
Nagano.
Yeah.
Like this is where there was the Niseko for the skiers, and now they're moving to Hakuba, and now they're moving further closer to the Japan Sea and Cortina and all these places. So there's plenty of things going around in Japan. There's plenty, but as you said yourself, like earlier on during our lunch, like location,
Yeah.
and transportation. I also believe in Akiya, urban Akiya. Now the difficulty with that, because I try to dive into that market, and it's not straightforward because very often what happens is inheritance. So like you have siblings battling over with one another over this, that, and the other, and it's not that easy. So you got to be creative.
Yeah. So I want to ask a couple of rapid fire questions for
The answer
those.
is yes.
A lot of my audience are interested or have started
real estate investing, and they're really interested in investing in Japan. What is your biggest piece of advice for those who haven't been able to start, but they really want to, but they're so scared or whatever the reason, they haven't started yet?
It's like going to the doctor, get a second opinion. So build a network. Yeah, you got to build a network. You got to talk to a lot of people. And before you, like Japanese house, they're wooden. So there are several types. But if you want to buy a wooden house, always walk in with a carpenter. So otherwise, it will look nice, but if it's been eaten away by the termites, you'll have to tear it down.
Yeah.
So that would be one. Depends on what kind of market you want to target. Akiya, unfortunately, I don't have enough experience. I would like to build a network. Yeah, that's about it. Like Japan is very much. I met a lady on the train, and she said like, "Ma, furosante ne, aruku shigoto." Like you gotta walk around, knock on a few doors, talk to people, take your time.
It's a people business, right?
It's a people business.
Yeah. Of course, numbers need to make sense, but more than that, like it's who you know and how well you treat those people, right?
And if you don't know right from wrong, they're gonna fleece you just like everybody else, just like everywhere else. Depends on what kind of market you're looking at. It depends if it's residential for you, if it's residential for Airbnb, if it's short-term residential, if it's long-term residential. Depends if you want to be central, if you want to be more countryside. Think about also the transportation. I would say that's the number one.
Yeah. I think knowing what you want, right? Because sometimes, like I get asked, like, what should I invest in? Like, no, that's something that you want to know beforehand. Like, what do you want, right? Like, I actually want Akiya. I want to fix it up and I want to live in it. Or no, I want like something that's purely for financial investment. So like, that would change the game. I think the game completely. So I think knowing what you want is really, really important.
And transportation is key.
Yeah.
For instance, and like if you look at Tokyo, for instance, I wouldn't buy in Tokyo, but if I had to buy, I would buy like either where we have a building in Sakuradai or around Shimokita. Because if you look at it, all the transportations converge over there, or Jiyogaoka, or all these places. Like, look at the transportation. This is really, really important. Also, Japanese people, they like the brand new stuff. So there's a massive discount if you go above 20 years. Above 20 years, beyond 20 minutes from the station, like it's pennies on the dollar. Now, is it what you really want? That's a different question. You're not going to bring a girl from Roppongi all the way down to Kawasaki 20 minutes from the station. That's not going to happen. She will be disinclined to follow your lead.
Maybe, well, if that's the case, maybe you're dating the wrong person.
Yeah, totally.
Yeah, I see what you're saying. Yeah, but yeah, again, right? Is it for your personal, if you film it, personal investment, or if it's for like financial investment, things that you look for would be a little bit different, right? Yeah.
But Japan is a country where you can really get some decent yield.
Nice.
But you got to be patient and you got to kiss a lot of frogs.
Yeah. Awesome.
Take your time.
Yeah, and you published a book.
Oh yeah.
Yeah. You want to tell us a little bit about it?
So, algorithmic short selling with Python.
Cool.
Yeah.
I'll put the link in the description.
So I should have brought the book here, but I forgot it at home this morning. So it's about trading. It's about selling short. So selling short is basically, most people, they tell you, oh, buy this, buy that, and da. Short selling is actually betting on decline or relative decline relative to the index. And it was a book written by professionals, mostly for professionals. And the substance of the book is, of course, about short selling, but it's about building a trading edge, getting your edge. And what is a trading edge? A trading edge is not a store in China. It's not a story. A trading edge is a number. And how do you optimize this number? How can you statistically tilt your edge in the right direction? And why algorithmic? Because I believe that if investment, people always tell you, what is your investment process? What is your investment process? If investing is a process, automation is the logical conclusion. And that's it. Like, you just need to automate it, because 90% of trading is mental. The other 50% is high school math. So the other half is high school math. So the idea there is really about automation, like make it so that you don't involve your emotions in it. Yeah, I do that, and soon we'll be doing something. I'm working with an hypnotherapist, and we'll be releasing courses about hypnotherapy, toxic shame, and trading, toxic shame and money. So what is toxic shame? We all have within us a version of I'm not good enough. Like, I've interviewed people, I've interviewed girls from 10 to 77. 10 was my daughter. It was adorable. I've interviewed people like very rich to very poor. I've interviewed like guys who was very successful to guys who like can't seem to make it. And we all have a variation of the same theme. Like for instance, you ask a bunch of guys like, deep when you look at the mirror, and I know because I asked you this question, so I know the answer. But very often when I ask guys like, okay, you work hard, you're making some money, but do you believe you're worthy? Do you believe you're good enough to be rich? The answer is
yes. I deserve it.
Exactly. This is what women say all the time. This is funny, like women, of course I deserve it, but for guys it's like, they slump. Like you can see in the body like, my man.
Well, Laurent, thank you so much. You inspire me. Man, you've achieved so much, and I learned so much from you. Where can people find out more about you if they wanted to follow you?
That's a good question. I'm on LinkedIn. I'm on major social media with my name, so it's pretty easy to find.
Oh, that's awesome. Congratulations.
Thank you very much.
Super exciting.
Thank you very much.
If you enjoyed this conversation and want to learn more about Laurent, he has a published book and a blog. I'm going to link them in the show notes. I hope you enjoyed this episode. This was my second time interviewing someone for the channel, so if you want to see more content like this or know someone you think I should interview, let me know in the comment below. And don't forget to like, share, and subscribe. Finally, make sure to download the free guide, How to Buy an Akiya in Japan as a Foreigner, and watch this video next for more.